Hi, this is Jim Bush, here to do the GrowthTrader Friday update for Briefing.com's Emerging Growth Stocks service. I'll start off with some big picture observations before discussing some individual names on the list, as well as the one new addition for Monday's Emerging Growth Stocks rankings. First of all, last week I talked quite a bit about how the emerging growth rankings were increasingly becoming dominated by very cyclical components and to a lesser extent emerging markets names. And this is very unusual because your traditional growth stocks tend to be in technology, medical technology, or retail, those types of groups. And so we're in an unusual situation here as we close out the year, where really industrial and some energy names, very cyclical stocks, home builders are dominating the list. So, that was very noteworthy. And over the past week, since I talked about it last Friday, it's become even more pronounced. So, the cyclical leadership is definitely still the dominant theme here. And that's one thing that I want to emphasize here is that those are the groups that are providing market leadership right now. The deep cyclical names, even in addition to home builders, which everyone knows have been outperforming. A lot of industrial names, even the steel names have been rallying and showing relative strength recently. So just bear that in mind as you're sort of watching the market on an intraday basis. That should be the first place you look for leadership. One thing that, again, I mentioned it last week, is what I try and do is tune out a lot of the fiscal cliff headlines and macro noise that we're experiencing right now. Today, for example, the negative fiscal cliff headlines are taking down the market. Big gap down this morning, and I just, for the most part, try to tune out the actual headlines and just sort of watch the market reaction to them. Because the market's looking ahead. It seems to me that the market is very much looking ahead to really the second half of next year. A lot of these cyclical names, the first quarter may not be expected to be that great. But if you look at the estimates, a lot of these names are supposed to see much better growth in the second half of next year. Whether that turns out to be the case or not, we'll see. But it seems like the market's looking well past the next month or so. And one thing that, to me, even though I don't necessarily want to be sort of bullish on this market, but when I look at the sector charts, that's when there's definitely a very bullish cast to this market. And I'll just show you one chart actually that really demonstrates it for me. This right here is a weekly chart of the industrials ETF. This goes back 6 years. And this is the type of chart where 6 months from now, you would say to yourself, how could I not have bought this, this market? When you see such a textbook breakout, chart as the industrials look right now, you have to be leaning bullish. Again, the cyclicals are dominating the action right now, and the industrials ETF, which also includes quite a few transports, is really one of the bellwethers there. I would suggest keeping an eye on this ETF, maybe even more than, say, the S&P or the Dow, because I think this is going to be a real tell. If this breaks out, we could have a good start to 2013. Of course, if ultimately talks break down in Washington and we go over the fiscal cliff, this chart could look a lot less bullish, after that comes to pass. But for right now, this is a very, very bullish looking chart. So, another thing that's looking positive as well is this is something that I've discussed before in other columns on the service. This is the ratio of the Russell 2000 Growth ETF, the IWO, and the S&P 500 ETF, the SPY. And similar to some of the charts I showed last week, basically what this tells you is when the line is rising, it means that the Russell 2000 growth is outperforming. When the line is falling, it means that the Russell 2000 growth is underperforming the S&P. So as you can see here, this is a year-to-date chart, so basically all of 2012 at this point. And the Russell 2000 Growth ETF has been underperforming the S&P for essentially the entire year. And for those of you who've been following the Emerging Growth Stock Service for a while, for several years now, 2012 has been a fairly frustrating year. There's been a lot of churn in the list. It's been much harder to see big gains in these names in 2012 than it was in the prior years. And I think this chart actually explains quite a bit of that. Because the small caps have had a really subpar year, and specifically the small to mid cap growth that are in the Russell 2000 growth ETF. So this is another chart to keep in mind as well, because what it shows now is that all of a sudden the small caps are starting to outperform. I mean, this is very early days in terms of that. And also this has given false signals before. Most recently back in June, I had to adjust the line, in August as well. But, it definitely bears watching because, when small cap growth starts to outperform, that's typically a very good sign, not only for the emerging growth stocks universe that we cover, but for the broader market as well. So, one thing that I also wanted to discuss today briefly was today, this is a chart of the S&P 500. We gapped down by quite a bit on the negative fiscal cliff headlines, and for the most part we've stayed down. And days like today are very, very instructive for me, because when you see a big gap down or really big push lower in the major indices, what you want to look for is those names that are either positive in the face of that or quickly recoup their opening losses, because these stocks are showing unusual relative strength. And again, this is just an intraday pattern that I'm looking for, but it's a broader concept as well, because what you're looking for is, in the face of broad market weakness, which are the stocks that institutions either refuse to sell or immediately buy on, essentially a small move lower. In other words, they're kind of jumping in to buy at better prices. And this not only is applicable on an intraday basis, but even more so if you get an extended correction. So for example, if the market just sort of grinds lower, here's one scenario. If the market grinds lower over the next couple of weeks or couple of months, and you see certain stocks either moving sideways during that period when the market's down, or even grinding a little bit higher, those are the stocks that funds refuse to sell, or even accumulating on weakness. And then when the market stabilizes and turns higher, these are the names that are going to shoot up to new 52-week highs. They're going to be the first ones to break out. This is actually a topic that I covered in a report I wrote over the summer. This is in the Emerging Growth Stocks archive. You can find it there. It's June 28th. It's called Using Market Declines to Help Locate the Next Great Growth Story. Basically, this goes into a little bit more detail of what I'm talking about, and I give some examples. And I think that it's actually a very good thing to, I always sort of, this is sort of my first principle. When I see market weakness, this is what I start looking for. So I would encourage you to read that if you haven't already. So in terms of what I've been seeing today in that regard, I went through the emerging growth stocks list, and I'll give you a few names where I saw some unusual relative strength. And again, this is just one day's action, so it doesn't, it doesn't prove anything, but it gives you a sense of what's not being sold on a big down day at the very least. So ALJ, for example, is having a beautiful technical breakout on no news. This is an energy company, Alon USA Energy, and this is a fantastic chart. You'd have no idea there's a market breakdown if you're just looking at ALJ's chart. So that one is, one of, the top leaders today. Another stock, MX, which is Magnachip. This is actually a stock that I wrote up this morning under the GrowthTrader Setup X ticker on Live in Play. Basically, Needham had a real positive note out on this one, or a real positive initiation. And I flagged it as one that, especially on a big down day, the broad market's going to keep a lid on the opening gains for a stock like this. I mean, normally this would gap up, say, 5% or more on a bullish initiation like that. But, turned out to be a great opportunity. It's up. This is another one that's showing clear leadership today. Another one is TASR. And even though TASR has some real fundamental catalysts, it has two big new product cycles that should gain a lot of traction in 2013. That's why it's been running, are these two product cycles. It's also, I suspect, getting a little bit of a tailwind from the tragedy, the shootings in Connecticut. Just as on the flip side of that, Take-Two, which has its Grand Theft Auto video game coming out in early 2013, is seeing a lot of selling pressure because it's such a violent video game. But back to TASR. This one's also showing pretty clear leadership. I would definitely keep this one on the radar as well. FLT is another emerging growth component that's showing a lot of leadership today. I'll just go through the rest of these very quickly. Winnebago is another one. They gapped up on a very good earnings report, but the fact that it's holding on to that gain, the entirety of yesterday's gain in such a big down market, is bullish. VVI as well. CONN, which is CONNs, showing a lot of relative strength. PERI, which is Perion Networks, is basically doing what it needs to do after that big decline. It's been selling off pretty consistently after it peaked in early December, but essentially it held its 50-day today. For a stock like this, which has had such a big run, kind of the first line in the sand is the 50-day moving averages. So at least as of today, it looks like it's going to hold that on a closing basis, which is what you want to see. SSYS is another one that's showing a lot of relative strength. It's actually even acting a little bit better than 3D Systems. In my opinion, that's because SSYS is a higher quality company. Illumina, ILMN. This one's interesting because it had a big gap up yesterday on a news report that Roche may again be trying to acquire the company. If you remember, Illumina rejected a bid earlier in the year from Roche. This was a little bit... Yesterday, it was sort of... The news report was... supposedly it was in a Swiss newspaper. There's a lot of skepticism that greeted the report, but the fact that the stock held on to that gap up from yesterday and is even extending it today in such a down market means that at least, some people are taking that seriously. Even if the newspaper report didn't have it entirely right, there are at least some people thinking that a deal could get done with Roche ultimately. FLT, actually I already went over FLT. Trimble is another name, the navigation company that's showing relative strength. SMP, Standard Motor Products is hanging in there. Again, you'd never know there was a broad market sell-off when you're looking at SMP's chart today. DAKT, another emerging growth stock that had a fairly big sell-off earlier this morning, held its 20-day moving average and came right back up into the green. That's bullish action. And finally, FAF, which is even a more extreme version of what you saw with Daktronics. This one sold off well below its 50 days early on and shot right back up, back above them, right back up into that consolidation. So it's First American Financial, it's a bank. Very bullish action there. So this is what I look for on a day like today. You get a big market sell-off, really the biggest one we've had in a couple of months, and I just watch to see which stocks are, basically which ones institutions either refuse to sell or quickly accumulate on weakness. That tells me a lot about the stock's character. And looking out, if the weakness lasts several more days, several more weeks or months, that type of action becomes even more noteworthy. The stocks that hold up the best in that type of weak environment. So with that, I'm going to move towards we have one new addition for the emerging growth stocks list on Monday. It is, I'll pull up the chart, it's POWR, it's Power Secure. This one looks a little bit extended right now. If you look at the chart, it's had a very good week. But essentially, what this company does is they provide infrastructure and services to electric utilities, as well as their larger commercial and industrial customers of those utilities. So it could be universities, supermarkets, commercial, industrial clients, that sort of thing. So for example, their biggest product line, distributed generation power systems. They also provide electric utility infrastructure products and LED lights for commercial and utility customers, as well as a whole range of other utility related products and services. As I mentioned, their largest and also fastest growing unit is distributed generation systems, which provide customers with backup power. This probably rings a bell with a lot of people because GNRC had a huge rally because GNRC provides backup power systems to homes and businesses, and GNRC had a big move following Sandy. And GNRC, by the way, is still really holding on to that move, which is bullish for that stock. But power is almost it's a very similar play to GNRC in that sense, because they also should benefit from the destruction from Sandy as well. And management also noted in a recent presentation that less than 3% of U.S. commercial and industrial power is actually backed up with distributed generation systems. So, for their largest and fastest growing unit, it's pretty much still wide open, in terms of that target market. The company said in their latest earnings report, or their latest earnings conference call rather, they're very bullish on 2013. Those are my words. Management made a point of noting that during this call that they haven't been this bullish on an upcoming year since really 2006, and this is reflected in the analyst estimates for 2013. Analysts expect EPS to grow 142% on sales growth of 23%. So it's a very interesting name. Again, fits right into that cyclical theme that we're seeing. This is very much an industrial cyclical stock, but it also has some growth factors as well. Growth is really supposed to pick up in the new year. So that's always a nice combination in this market. Cyclical exposure and growth characteristics as well. So that's the one new addition to the emerging growth stocks list on Monday. With that, I'll conclude and just wish everyone a Merry Christmas, and I'll talk to you next Friday. If you have any feedback, by the way, please feel free to click on my email address in the column. And again, we'll be back next Friday. Thanks. Bye.